to capture explosive gains quickly? Then watch this video and I'll show you how to lock in big gains in minutes. Earnings offer big opportunities, but with it comes greater risk by being exposed to these binary bets. But you don't need to step in front of earnings and assume that risk. You can play a name in the aftermarket after earnings hit for big wins, if you have mapped out a plan. If you're an active trader, you've probably heard of hit and run trading. It is referred to as the Bible of short-term trading. I'm Jeff Cooper, creator of the Hit and Run method and author of the Hit and Run books. I also write a daily market report every morning, in addition to a nightly Hit and Run stock report. This has both long and short day trading and swing trading ideas each night. Additionally, members have access to my private Twitter feed, where I offer several actionable ideas every day. Today, on the private Twitter feed, I noted that Roku, let's take a look at it here. I noted that Roku was under pressure on the runoff. This is a 10-minute Roku here, and you can see this is what it looked like going into the last 2 hours, under pressure from basically 52.75 all the way down to 51.25 in no time, and that followed a steep drop off right from the get-go after a pop-up opening. And this pop-up opening here, again, this is just a short-term 10-minute chart, but often, as W.D. Gann said, fast move come from third lower highs, and you can see 3 lower highs here. Granted, this is only on the 10-minute, but you had this waterfall decline right from the get-go after this pop-up opening. That was the tell that it was a short. Anyway, today on our private Twitter feed, I noted that Roku was under pressure going into the runoff, and it looked like it could be magnetized to 48 after earnings, where it would be a good risk to reward buy. Why did I think that this 48 level was key? Well, let's go to the dailies and take a look. At the 40-day, the 48 level ties to a 2200 bow tie. That is a confluence of the 20-day and the 200-day moving averages. The magenta line is the 200-day, and the red line is the 20-day moving average. Roku closed at 51.50 during the session, and shortly after the bell, after reporting, it dropped to 47.90, and within minutes it bungeed back to 54. Now, I'm not an analyst. I had no idea what Roku's earnings would be, or whether the street would interpret them one way or the other, nor did I care to know. What I did know is that Roku was in a strong uptrend. Let's take a look here. You get an idea. Roku's been in a strong uptrend since December, and there was well-defined support on a possible air pocket here to this 48 level where the two moving averages intersect. The key to the setup was this multiple support at 48, where there was what I call a 2200 bow tie. It wasn't just simple support in one moving average. There was a convergence of these two moving averages. Why was this so important? First and foremost, Roku just recently had broken out over its 200-day moving average right here, pulled back, and then it was on its way after this backtest. The 200-day is considered a bull-bear pivot by many traders, so after this successful breakout, the likelihood is that it would find buyers on a retest. Secondly, pullbacks to the 20-day moving average I refer to as the holy grail of setups. That's because they so often identify beautiful entries. You can see here's a rising 20-day moving average, this red line, and pullbacks to a rising 20-day moving average are great, often great pivot points. You can see that this was actually the first test after hours. This was a first test of the 20-day 48 here in this whole advance. Came close, but never really fully satisfied. A test of the 20-day throughout the whole advance from the Christmas lows. After hours, what did ROKU do? This doesn't show the after hours action, but ROKU plunged to 47.90, almost precisely 48, after reporting, and quickly knifed back up to 54 within 5 to 10 minutes. You think traders had this level mapped out? I do. My thinking was that bulls would likely circle the wagons and protect their baby at this key level. Also, any players bullish on ROKU that were not involved but were looking for a new entry probably had this region circled on a smackdown opportunity after earnings. At the same time, 25% of ROKU's float is short, so a drop after earnings was likely to find these shorts scrambling to cover, at least to partially cover and trim some of their shorts. The icing on the cake? Let's pull back the lens here, and I'll show you what the icing on the cake was. In addition to this pullback to the 48 region, this was also the breakout pivot from a cup and handle. Here's your cup, and here's this handle, and this breakout over 48 represented the pivot out of this cup and handle pattern. So the market has a memory, stocks have a memory, and it was likely to find support at that breakout pivot. Moreover, you can see here that this first breakout over the 200-day, you could say that this was a handle here and it successfully broke out. But as I always like to say, the first mouse gets the squeeze, and the first breakout saw a squeeze back down from all the way from 51.50-ish down to let's call it 46. But while the first mouse got the squeeze, the second mouse, the second successful breakout over the 200-day, got the cheese for the bulls, and this was likely to be a successful retest. All these elements combined for a 10% move in about 10 minutes. If you're interested in getting more setups like this before they happen, click on the link, and with it, get a free copy of my best-selling classic, Hit and Run Trading, and check out our daily ideas. Hope you enjoyed this video. That's it for now. See you next time.